We had a pretty quiet start to this week with not much in the way of data or events for financial markets to go on, but things have certainly picked up over the last 24 hours with quite a lot of data coming out and some interesting movements within financial markets. Firstly, in the Euro region, which has been in the spotlight for all the wrong reasons, with concerns over Greece and a very weak patch of data of late. Well, they actually had some good data released overnight, and normally this would help strengthen the euro. Firstly, we had some surveys which point to a bit of a recovery in the services and the manufacturing sector in Europe in the months ahead. And we had a German business climate survey as well, which was also positive. Now, normally the euro would strengthen on the back of those sorts of reports, but it didn't. And the focus was on credit ratings. This time it's Portugal in the spotlight, a ratings downgrade for them from Fitch, and that weighed on the euro once again and the currency struggled. Across to the UK, and they had their budget statement out overnight. Now the UK economy is another one that's been under a lot of strain, and given their circumstances, this wasn't going to be a budget statement which was filled with a whole lot of pre-election spending. They go to the polls in May. It was fairly subdued, and the debt situation in the UK is going to be tough for quite a while. Public debt as a percentage of the gross domestic product is going to continue to rise for quite a few years there. Across the Atlantic, and there's more mixed data. In the States, we had a strong durable goods report, but that was offset by a fairly weak housing report. There in the States, one of the big things we saw was a very big movement in the government bond market. The 10-year government bond yield jumped around 14 basis points, which is a really big movement for one night in government bonds. And the yields there are creeping back up towards 4%. Down in our part of the world, where we had the current account figures out yesterday, and the current account deficit was a little bit larger than expected. Financial markets seemed to largely ignore the figure, and there wasn't a big reaction in currency or in interest rates. But that deficit was a little bit larger than expected. One of the things we noticed within the figures was the profit outflows are a little bit stronger than expected, and that contributed to the larger than expected deficit. The bigger focus for financial markets over the next 24 hours is the release of gross domestic product today. That's a more important report. It measures the pace of economic expansion in the fourth quarter of last year, and that's got the ability to move currency markets and interest rate markets over the next 24 hours, depending on just how that data flows out. We've also got trade figures out tomorrow, which will be interesting to see how we're faring on the import and export front in 2010. Well, for the New Zealand dollar, we seem to be finding pretty reasonable support at 70 cents against the US dollar. We got down towards those levels, and we're trading a little bit higher than that now. So we seem to be in the 70 to 71 cent range against the US dollar. Against the Aussie dollar, we've picked up. We're trading over 77 cents against the Aussie dollar, which is stronger than the recent lows, but it's still very low compared to our long-run historical averages, which is good news for exporters trading into that region.